From the studios of Farm Journal Broadcast, this is AgDay.
Coming up on AgDay, the good news and bad news on the future of the dairy industry in 2020.
Based on this, we would expect to see continued consolidation in the dairy sector.
Coronavirus fears continue to grip the world and the ag industry, affecting shipments around the world, but there may be signs of hope.
I do expect a big announcement of some sales here over the next couple of weeks.
As the president signals more help may be on the way to farmers. Good morning, I'm Clinton Griffiths. President Trump is hinting that another round of trade aid could be on the way to America's farmer. The president making the announcement in a single tweet on Friday, saying, quote, "If our formerly targeted farmers need additional aid until such time as the trade deals with China, Mexico, Canada, and others fully kick in, that aid will be provided by the federal government, paid for out of the massive tariff money coming into the USA," end quote. The tweet coming on the heels of USDA Secretary Sonny Perdue saying that a third round of market facilitation program payments was unlikely. Perdue telling reporters at USDA's annual Outlook conference that the government might reconsider if there was an unexpected disruption in global trade flows. Perdue adding he expects Chinese buying of U.S. agriculture to ramp up this spring after the coronavirus outbreak in China lessens. China's leadership is sounding a cautious note about the country's progress in halting the spread of coronavirus that has killed thousands of people. The ruling Communist Party saying the situation in Hubei province and its capital Wuhan remain grave. It said the outbreak has been preliminarily contained, but that the turning point has not been reached yet. One analyst saying despite the virus, he expects China to buy U.S. ag products soon.
Well, they've been shopping over the last week, and I do expect a big announcement of some sales here over the next couple of weeks. Shipments may be a different thing. I think they want to show we're still in business. Coronavirus hasn't handicapped us. There's a lot of pride in the Chinese government. I think they want to show that, but shipments may be much later in the year.
And China appears to be moving forward with trade plans with the U.S., announcing on Friday was suspending more tariffs on the imports of U.S. industrial goods. Affected by this latest round of reductions are industrial components and medical and factory equipment. The penalties will be suspended for a year starting this coming Friday. The country suspended duties on $75 billion of U.S. goods earlier this month. But getting product in and out of China right now is proving difficult for some. The largest shipping company in the world is facing a weak start to the year. Danish shipping company Maersk saying it has been forced to cancel more than 50 trips to and from Asia due to the coronavirus. With 30% of the company's business related to China, the company's CEO saying the impact from the virus is quite substantial. Meanwhile, talks between U.S. and China officials on implementing the Phase 1 trade deal are reportedly proceeding as scheduled despite that coronavirus outbreak. Now, that's according to the senior U.S. agricultural attaché at the U.S. Embassy in Beijing. Beijing facing several regulatory and administrative deadlines in the coming months and year on various market opening commitments for dairy, beef, pork, pet food, infant formula, and related products. He added that China has not asked to delay work on any of those issues. The two sides continue to hold digital video conferences to go over the details. Some good news coming out of last week's USDA Ag Outlook Forum, with economists calling for milk prices to strengthen slightly this year. It's also forecasting that milk cow numbers are going to be 9.33 million head. That's only slightly higher than last year. Relatively strong growth in milk per cow is expected in 2020. Forecasts say higher yields are expected to be promoted by rising milk prices and steady feed prices. Milk per cow is expected to average 23,785 pounds for the year, or about 65 pounds per cow per day, an increase of more than 1%. Now, the forecast for milk production is 222 billion pounds, and the all-milk price is forecast to be $18.85 per hundredweight, an increase of 25 cents from last year. But USDA says there are still pressures on the industry.
Now more than half of U.S. dairy cows are being milked in operations with 1,000 or more cows, 5 times higher than we saw 20 years ago. And the reason for this is apparent in this chart showing the cost of production for dairy farms across the United States. The chart shows that the majority of dairy operations have costs of production that are greater than the all-milk price. But the majority of milk production is occurring on operations with costs higher than the all-milk price. Based on this, we would expect to see continued consolidation in the dairy sector.
Economists say there are several things that could still impact supply and demand along with prices for the U.S. dairy market, including the coronavirus, trade negotiations with China, and ratification and implementation of the USMCA. After a wet couple of weeks and a lot of flooding, the southeast is trying to dry out. Meteorologist Cindy Clausen joins us now with a look at recent rainfall totals for the area.
Yeah, that's right, Clinton. Lots of rain over the past couple of weeks over the southeastern part of the United States, devastating flooding, and obviously it has been a big impact on people. You can see this is just the last week, and a lot of these areas from the far eastern part of Texas all the way through the southeastern Gulf Coast states especially have been seeing some serious amounts of rain. A lot of areas in the last week have had at least an inch of rain, in some cases over 3 inches of rain. And if you add up over the last month or so, we are looking at totals potentially over 20 plus inches in some of these areas. So it has been very, very, very dry. However, there is some good news for later on this week. And while there's been a lot of rain in that region recently, take a look at this beautifully painted silos. Corey Ritter shared this picture from Colquitt, Georgia. Now you can see the work of art depicts a few southern crops, including peanuts, cotton, and corn. The detail on that is just absolutely amazing for something that big. Thanks so much for sharing that with us, and we will take a look at that national forecast coming up in just a bit. Clinton?
And an update to a story we brought you last week. The state of California has filed suit against the Trump administration over its new water rules. We showed you President Trump signing an executive order last Wednesday in Bakersfield. The order governs how much water can be pumped out of the watersheds of the Sacramento and San Joaquin rivers for agricultural businesses and water agencies. State leaders say the new rules would push endangered fish species to extinction, even though the new rule promises $1.5 billion to help restore habitat and improve fish hatcheries. One California grower talking to AgDay's Betsy Gibbon about the battle over water in the state.
And so the issues that we deal with are extraordinarily complex, but very simply put, we need a long-term reliable water supply to allow us to do what we do here.
Jacobson says his area in Fresno County receives on average 11 inches of rain per year. That's why farmers have to rely on outside water supply for crops. When we come back, a look at the forces beyond agriculture currently influencing commodity prices. And later, Machinery Pete shares his top auction tips from 30 years of watching equipment sell. Farm debt is expected to rise to record levels this year. That's according to new estimates from USDA. Economists are estimating farm debt to rise to $425 billion. That's up $10 billion from last year. USDA says the debt to asset ratio for farms remains at its highest point in more than 15 years. Farm bankruptcies jumped 24% last year. Now, USDA chief economist Robert Johansson saying, quote, "The farm balance sheet remains tight," end quote. USDA last week holding its annual Ag Outlook Forum in Washington, as we said, calling for acreage to be mostly up from last year after 2019's wet planting and harvesting seasons, projecting 94 million acres of corn to be planted, which was up 5%, 85 million acres of soybeans, up 12%. But was that acreage bump a surprise?
Acreage bump was expected because we had about 15 million acres that needed to come back into production after last year's big prevent plant fiasco. We expected more of those acres to come into soybeans since soybeans lost more acres, but both are going to gain. We tend to average around 178, 179 million acres between the two, and I expect us to try to move back up toward that range.
Suderman says what really matters is what the farmer says they're going to do and what the industry says it's going to consume, which isn't in this report. He says it's the USDA's March Planting Intention Survey that will be the focus. Traders had a lot to weigh at the end of last week. New projected crop numbers from USDA, a possible record crop getting harvested in Brazil, and prices below U.S. export values, and export sales that showed better than expected corn sales. Now here's a look at where we're starting this week from the CME.
Cattle did fall again. That USDA expectation is bearish news right now. The concerns are increasing supplies by the year end has a lot of traders worried, and we've got that big move yesterday and today to kind of end the week was somewhat of a surprise, and it gave back all the week's gains which really has everyone scratching their head as to, is the market going to continue to move lower? Now, feeders were lower. Now, there is some concern about that coronavirus. The economic impact may be further than we thought. As you know, the Dow was down about 250 points. Sometimes that has a little bit of an overlay into all the other markets, but clearly it's going to really insert a lot of the confusion or uncertainty as to what China is going to do. Without them participating in the market, in our export market, I think the idea that we're going to have a larger supplies really takes its toll on our futures market right now. Traders are still hopeful that we can send to China a decent portion of our pork supply right now. However, the chief U.S. economist says the reduction in purchases from China from 36 billion to 14 billion is quite a leap, and I think that has everyone wringing their hands. You would think a report like this would send the market so much lower, but we've been faced with this so many times that while we're a little bit lower on the day, I don't think everyone's completely convinced that this is really going to happen. We're going to keep our fingers crossed that they're going to get a hold of it, and we'll be able to have a better week starting on Monday.
Bob Utterback with Utterback Marketing, our guest today. Bob, let's talk about some of the bigger picture issues that agriculture is facing in general, and some of that being the inflationary pressure that we often see on commodities.
We want inflation to come in for agriculture. We want that excitement that the market demand is picking up. We want that excitement that inflation is going to push the price, and that would help us out on the selling side of the equation.
Sure.
And I want two commodities that I would like to watch at it for cues is one is crude oil. Crude oil, if you look at historically, crude oil to soybeans, crude oil to corn is very related, even somewhat related to the meats, but more to corn to soybeans. But right now we're in an excess supply. The world demand is basically backed off because of the virus and outbreak. And so we're in the low 50s, and you're already seeing some producers actually cut back production. I don't think we'll get too much below 50, maybe 48 to 50 will be a value buy. And so if I, as a short term, I would be buying my energy needs for my irrigators in the western states. But once we get to crude oil to turn, and gold and silver, I'd be watching those for long-term moving. If you get the crude oil and gold, silver to start turning the long-term moving averages, and I would say like the 50-day, 5-day moving averages, mid-range moving averages turn positive, then you're going to have, I think, a movement up in the commodities that the CRB indexes will start getting more positive spin. Now, the dovetail is if we can get the equities to the top, and then the commodities, they tend to be counter-cyclical. So until we get the commodity market, the stock market to top, which I personally think is at least another 2 years out, 2 to 3 years out.
Okay.
But that heavily depends on who gets elected this fall.
Right. There's a lot of things in play this year. But yeah, we have been watching these equities to see, if they're going to turn, will people go to commodities for a safe haven?
I think that's going to be, eventually you'll see that, but that's going to really depend a lot about this fall activity, and there's a lot of decisions we need to make.
All right, appreciate it, Bob. Thank you so much for those insights. We'll be back for more Ag Day coming up here in just a minute.
To talk with Bob one-on-one, call Utterback Marketing Services, toll free at 800-832-1488. Got equipment to sell privately but tired of scams and hassles? Visit MachineryPete.com and click Sell Mine. MachineryPete.com, the simple and secure way to buy and sell equipment online.
Meteorologist Cindy Clausen taking a look at our drought monitor. And Cindy, I heard a statistic that said about 60% of California is now in some sort of drought or dryness.
Yes, and obviously we have seen it worse in the past, but we've been seeing a lot of that drought moving to the south. As you can see, a lot of the drought, the dry areas are mainly in the western part of the country. A lot of it in Texas. You can see the Four Corners region very, very dry, and pretty much up and down the west coast as we see areas of dryness. Now, obviously, as I mentioned, it's been a lot worse in recent years, especially over in California, but we are still having to watch these dry areas. Drought still exists in far southern parts of the southeast. Obviously, with all the rain that we've had over the past several weeks, we've wiped most of that away. But this is the change over the last few weeks. So 2 weeks ago, you could see everything kind of dwindling in the southeast, and you could see everything kind of slowly pushing south in a lot of the western part of the country as well. So the worst of the dryness we are seeing is in the Four Corners region and in the southern part of Texas at this time. And when you look at it as far as the root zone moisture, you could see the effect of all of of that recent rain that we've had, especially in parts of the Gulf Coast states, eastern Oklahoma, maybe northeastern Texas. Still really wet, though, up into parts of the Great Lakes and in much of the Corn Belt. What does the week ahead have in store for us? Let's start off with the jet stream. And we're going to be watching a trough that's going to be moving across the country. Check this out as we get into Wednesday and Thursday. Cold air coming into the Tennessee and Ohio River valleys. And so we'll see some stormy weather along with that, at least on the front edge of that, but the cooler temperatures will certainly be noticeable. And then we'll see a warm up out in the west. And as we continue on through the weekend, we see that trough then starting to move off over the weekend, but yet another one coming into the early part of next week. All right, what can we look for? So overall, we are looking at below normal temperatures for a lot of the country as we get into the week ahead. That's a good chunk of the U.S. with below normal temperatures, a little on the warm side in parts of the southwest and into the far northeast. Now, as far as precipitation, on the dry side for most of the western half of the country, a little wet in the southeast as far as Florida and in the northeast. And I put it normal here because we start off wet, but we end up drier, at least for this week. Now, as we look at the next 30 days, below normal temperatures for a lot of the eastern and southern parts of the country, just warm out in the southwest. And precipitation over the next 30 days, overall, we are looking at wet conditions continuing in the southeast, dry for much of the Great Lakes and much of the west. That's your national forecast. Now let's check out the weather where you live. Workmore, Georgia, showers, maybe a thunderstorm for you today and a high of 68 degrees. Monday, Missouri, rain is likely for you with a high of 50 degrees. And Coffee City, Texas, partly to mostly sunny with a high of 65.
Up next, a buying lesson from the best.
Hey, stay tuned, folks. Coming up, I'm going to share 3 rules I've learned from my 30-plus years of tracking auctions.
A surprise from Deere & Company, delivering an unexpected increase in earnings. It reported a fiscal first quarter profit of $517 million on a per-share basis. The Moline, Illinois-based company said it had profit of $1.63. The results beat Wall Street expectations. The agricultural equipment manufacturer posted revenue of more than $7.5 billion in the period. The company's CEO saying that farmer confidence has improved in part due to hopes for a relaxation of trade tensions and higher ag exports. The company's stock has climbed nearly 4% in the last 12 months. What are the rules for getting a great deal on used equipment? Well, Machinery Pete lets you in on a few of his secrets.
All right, folks, time to share my 3 Machinery Pete 75% rules. Rule number 1, when you're out at an auction and the bidding gets down to the final couple, folks, we often see it every sale. The bidder will shake their head and walk away. You know what percentage of the time they wind up bidding again? Yep, 75%. And actually, they usually bid twice more. Now, my 75% rule number 2 deals with very low-hour, older tractors and even combines. We always assume that collectors are buying these things. But over the years, I found 75% of the time, no, it's not collector. It's just a farmer who buys it to farm with. Case in point, this amazing 1983 John Deere 8820 combine, only 15.5 actual hours on it. Sold last June up in Beardsley, Minnesota on an auction. Went for $75,500. And yeah, the guy that bought it, not a collector, just a dude from Texas that was happy as a clam to take it out to the field to harvest. Now my 75% rule number 3, it's what I call my Machinery Pete ratio. You take the average auction price divided by the average dealer ad price. In the past 17 years, historically, it comes out right around 75%. So if the percentage is higher than that, that's a sure sign of a very hot item. And if you drift under 70%, that's an item that's not as hotly in demand.
All right, thanks, Greg. After you fry up your favorite dish, what do you do with the leftover oil? Up next, we'll see how it's being turned into beautiful art in the country. Everyone has an old can of it at their home, used cooking oil. Some people are getting clever with new uses for it. Check this out. That is a 3D printed butterfly, and it was made using old cooking oil from McDonald's. The idea started at the University of Toronto's Scarborough campus in the environmental research program. Students had a problem. The materials they needed for 3D printing are expensive. Well, a professor analyzed the resin they used and saw that its component molecules were similar to fats found in ordinary cooking oil. So the professor and his students reached out to fast food restaurants asking for oil, and McDonald's responded. They were given 33 ounces of waste oil, and the students say it took several attempts, but they finally got it right. Pretty neat stuff. That's all the time we have this morning. We're sure glad you tuned in. It's been part of your day with us. From all of us here at AgDay, I'm Clinton Griffiths. Have a great day.